Everyone, you're most welcome to today's episode of the Market Snapshot. You're joining the snapshot today with me. My name is Norbert Kiza, and I'm the education partner for FX Pesa here in Kampala, Uganda. I'm happy to be with you guys today. So today is FOMC day, and we are waiting to see what this gentleman, Jerome Powell, is going to speak about today at 9:30 p.m. For those of you that are not yet aware, we are now currently in daylight saving. So if you check on your economic calendars, wherever you check them from, you'll notice that the conference is actually scheduled for 9:30 p.m. and not for um, 10:30 p.m. like we've always been having it. Yeah, so today we are going to be listening in to Powell, and I believe really to start it off is that most of the data that we've been getting from the US, the inflation data, we had PPI the other week, we had CPI, we've also been getting GDP data. Most of it has essentially been pointing to a very resilient economy. And of course, if I'm to focus it on inflation, we have also been seeing that inflation resurges really playing a big part on the Fed's pushback on your rate cut, on that rate cut narrative. So I would say that today we can expect to see a fairly hawkish Fed. I do not think that the Federal Reserve today is going to show us any kind of dovishness. What we shall be waiting to hear, though, is to see what they think about the inflation and whether it's on a steady progress to their target of 2%. Yeah, so I think that's what we shall see. To start it off, of course, really looking at how the markets are looking like as of now, we are having commodities like oil, Brent, most of them are selling. And of course, for those of you that like myself trade Bitcoin on the MT5 with FX Pesa, you'll notice that we've also been seeing a steady decline for some of the cryptos that are also available on the MT5 to trade. Stocks yesterday made a little bit of a comeback, of course, with the first meeting kicking off for the FOMC that was yesterday. And of course, today they will be having their final meeting before they close it off with a conference at 9:30. Looking at currencies, looking quite choppy as of the Euro session, not that much of a move. However, when you look at GBP/USD, we had a little bit of a spike on it from declining CPI that came out at around 9 a.m. today. And of course, we are going to see a much bigger move, especially towards the start of the US Open. And between the hours of 8 p.m. to 10 p.m., make sure, guys, that you're on your MT5s. Because you're going to see a lot of good movements there that you do not want to miss out on. Yeah, so crossing over to the CME Fed Watch tool, this is what it looks like at the moment. If I'm just to take us back to December, if you remember in December when we had that Federal Reserve conference, it was on the 13th of December. The chair, Jerome Powell, had a bit of a dovish tone when he surprised markets, indicating for the first time since 2022 that the Federal Reserve was going to change from its policy of interest rate hikes. The first time the Federal Reserve hiked rates was pointed to start their rate hike journey. That was in 2022. I think it was January 2022. But in December 2023, we saw a remarkable change of comments from Powell when he indicated that they are going to look at potentially cutting rates in 2024. So in December, he mentioned that that the rate cuts should start sometime this year. And if you recall, back then when we had the FedWatch tool, it was indicating that there was a probability of over 90% of a March cut. But when we had the meeting, the FOMC meeting that we had in January, we saw that pushback on that rate cut narrative from the FOMC when they indicated that no, they will not be cutting. We shall not expect to get rate cuts in March, but we should get them possibly towards the first half of the year, which is around July. Now, looking in retrospective to where we are right now, which is in March, we are seeing quite a lot has changed, and we are looking at a probability of rates keeping on hold within that target range of 5.25% to 5.5%, and we are not expecting any cut. We're not expecting any hike today, since it seems that the Federal Reserve is most probably done with hiking rates. When we cross over to June, which will be the last month of the first half of the year, we are seeing that there's a 60.4% chance that there's a cut that takes us back to the target range of 5 to 5.25%. Crossing over as we go to July, we are seeing that the percentage keeps slightly the same for the target range of 5.25%. So I'm thinking within the months of June and July is when we are going to potentially get that first cut coming in by the Fed. Since we are in a March meeting, I think what traders are going to be waiting to hear from Jerome Powell is going to be on aspects of inflation, what the Fed thinks about inflation, and whether it's on a steady decline to their target. If we get any kinds of comments from him that inflation is still sticky and we're not yet seeing it coming down nice like we want, then I think that is going to strike a bit of a hawkish reaction on the market. We should see DXY potentially spiking higher, and we should also see risk on assets like gold. We should also see things like the indices also pulling back a bit. The other thing that we are going to be majorly focusing on is going to be the conference questions, which of course are asked after Powell reads his statement. So the statement is normally read for usually the first 10 to 20 minutes. And after the statement is read, and then usually Powell takes questions. So we are going to be getting questions, I think, from the journalists that will maybe focus on aspects of inflation, that will maybe try to get Powell to mention on aspects of timing. Okay, which of course I know, this Powell always cleverly dodges those questions on timing because he does not want to, they don't put their foot down and tell us exactly what they are going to do, but they give what we call vague guidance, leaving us with more questions rather than answers. And of course, I think as usual, as the FOMC, they will always make sure that they will mention that they are data dependent. So I think we'll just have to wait and see how the market reacts. So before I take us to the trending tweets that we are getting on FOMC, I just want to show you guys what the DXY is looking like at the moment. So if you happen to look at the DXY, you'll notice that the DXY has been in a steady uptrend. We've been having it moving steadily to the upside on the back of that resurgence on inflation. If you remember the inflation we got for CPI, we saw inflation, the headline number increasing from about 3.1% to 3.2%. We also saw PPI and retail sales for the US also resurging quite strongly, bringing back that strength for the dollar. And I'm thinking it's going to be a very interesting move for the DXY this evening. That could potentially take it all the way back to where it was on the 13th of Feb, which was last month's CPI. So looking at the possibility that we get a hawkish pause from the Federal Reserve today, then one of the major gainers is going to be assets like USD CAD that will continue to the upside. USD JPY shall also resurge to the upside, and potentially we shall see the DXY also moving much, much higher. Now, this is not really important for trading today, but just for our knowledge, is we know that we're in an election year right now. The American citizens are going to be voting for their president on the 5th of November, 2024. So having said that, we are most likely going to get one big move between now and the first rate cut, which should take us maybe somewhere between now and say June. So likely traders might want to increase or are most likely to increase their dollar longs or medium-term dollar longs before at least that first rate cut comes in. Yeah, so crossing over to Twitter or X up to see what is trending for FOMC, we are seeing that actually they're about, FOMC has about 30,000 tweets at the moment, okay? And of course, we are seeing that, there's a lot of comments from traders really on what is happening on what is likely to happen from Powell's conference today. So of course, some of the things we are seeing there, we are seeing, of course, everywhere, you know, FOMC, 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 FOMC. Most traders, of course, I'll be waiting for Powell and, of course, what he's going to mention, and, of course, how that reacts, especially for things like the dollar. Yeah, so you can check out and see what comments we're having there, but everyone today is essentially waiting for those comments. Now, let's cross over to the calendar and see what else we have for today. So today we had the pound CPI, which actually came in a little higher. We are seeing that a little lower rather. On the core, we saw a decline from 5.1% to about 4.5%. On core CPI, we saw a decline from an increase from negative 0.9 to 0.6. However, on the headline, we saw a very sharp decline from 4% to 3.4%. So again, indicating that the US actually is still resilient. So now there's going to be a bit of we'll have to really wait and see what Powell thinks about this, because when you look at economies like the UK, and of course when you look at other countries like Japan, they have been struggling with inflation. The inflation is really on a steady decline. But when they go to the US's inflation is actually increasing steadily. So the thing is Powell going to uh, talk about inflation in a bad way, or is he going to talk about inflation in a good way? Because if he talks about inflation in a good way, then it means that risk-on assets are actually going to benefit, simply because the FOMC is not going to be talking about inflation and saying that no, we can't hike because inflation is still very high. However, they will then tell us that inflation is high, yes. However, we expect it to decline over the next few months. Therefore, we shall still be ready to cut with or without inflation increasing as much. So if they strike such comments, then I think, guys, we are going to be looking for a bearish dollar. But let's just monitor and see. So now, as you look at the calendar, it is divided into different parts. You have the interest rate projections for the first year, for the second year, and then you have interest rate prediction for quarter one. Now, you'll also notice that the other thing that is very, very important is going to be the FOMC statement. Okay? Between 9 to 9:30, traders digest the FOMC statement, okay? And whatever movements you are going to be seeing in the market are going to be created from the statement that will be released. Now, in aside to that, we're also going to be waiting to see the economic projections. If the Federal Reserve indicates in the economic projections that the US economy is resilient and that the GDP is looking quite strong, inflation is looking steady, of course, still not at their long-term target, but looking quite steady and doesn't look like it's rising too high, we might be inclined to think that these guys are not going to be in a rush to cut rates. Now, if they are not in a rush to cut rates, then I'm thinking DXY is going to benefit. Okay. And we'll also be waiting to see what decisions each member has made through the dot plot. So we need to look at the dot plot, which will also be released, to see what their projections are. If we get some dot plots, rather plots showing us that the members are expecting, cuts, more cuts than previously expected, then we should see a potential sell for the dollar. However, if we see less cuts than expected, or than we had in the previous meeting, then we're going to be expecting a weaker dollar. Awesome. So I think that's it for the calendar. And now we think it's time for us to cross over to the charts and see what is going on over there. So let's cross over to the charts and see what's going on over there. Right. So this is, let's start with the Dow Jones. and see what is happening with this Dow Jones asset. For the Dow Jones, I'll start from this side right here. Uh, when we had the Nvidia earnings, we saw a steady decline over for US 30 roll, and we saw a slight bump in price. Just a moment. Let's see. Awesome. So on the 21st of Feb, if you guys recall, we had the the Nvidia earnings that took us all the way to the upside, and uh, we actually saw the Dow Jones steadily reaching that peak around 39,300. Now we got into a descending wedge. Okay, we got into a descending wedge and then into a bearish flag. Okay, so the bearish flag for the Dow broke sometime last week that took us all the way down here. But yesterday, I suspect because we are trying to create some kind of a premium for FOMC, we saw the Dow Jones breaking out of that ascending triangle quite strongly, and right now it's looking crazy bullish at the moment. And at the moment, we are going to expect to see essentially how it progresses to this level here. If we get a dovish strike of tone from Powell, and if we expect to see that journalists are going to be pushing Powell to talk about rate cuts, if we also see from that dot plot that FOMC members uh, and have noted on the dot plot that they're going to look at more rate cuts than previously expected, then we are going to get the Dow Jones potentially retesting to the upside. If we get a test of this level, then we could potentially see it breaking above this block here and moving higher. However, if we get a strike of a hawkish tone from Powell, and if we see less dot plots or less likelihood of rate cuts than previously expected, we are going to get back into a descending channel and potentially sell all the way back to where we were around this time yesterday. So Dow Jones traded quite nicely yesterday. If you are trading it looking for scalps, I think it was a very good, you know, trade opportunity for scalping. I was able to trade the Nasdaq yesterday, like I'll show you, and you know, made a good return, you know, on looking for buys there. So at the moment, the price action is looking quite range bound without any immediate direction, but we are going to see how traders essentially pricing, you know, that FOMC statement and comments from Powell. Now, crossing over to the Dow to Nasdaq, we are right now in a very nice ascending triangle on the Nasdaq with a lot of liquidity sweeps that appeared yesterday at about 8 p.m. And the Nasdaq is looking steady to the upside. However, if you look at the Dow Jones and you look at the Nasdaq, you'll notice that the Dow Jones is closer to peak levels, okay? But the Nasdaq is not closer to peak levels. And the Nasdaq is also trading with lower highs, okay? Indicating to us that there is an amount of bearishness that is still present in tech stocks. Now, however, the PPI data that we got last week showed that inflation had resurged in the US, and it's also likely that the tech stocks have also cut back on their gains on a likelihood of inflation increasing. For those of you that are not aware, whenever CPI comes in much higher, it's usually seen as bearish for the tech stocks first, even before you go to the other stocks. The tech stocks normally tend to decline on rising inflation. So today is going to be a nice day to trade the Nasdaq, because if we get a hawkish tone from Powell, we're going to be looking to sell the Nasdaq back to levels that we had when we had the Nvidia earnings. That is if it sells all the way down here. Now, if we get a dovish tone, I suspect that Nasdaq is going to come and rally and potentially create a break of this structure here, and it will be going into that bearish order block that we had. That was around the level of 7th March. Now, when you look at Nasdaq on a H1 time frame, you'll notice that there's right now a liquidity sweep that was actually able to create some kind of a bearish order block on a H1 time frame. Okay, and that bearish order block is actually still preventing Nasdaq from getting into some kind of bullish momentum. That is why we need to see how it progresses. If we see a break of this level here, then we shall potentially be looking to buy Nasdaq all the way up here. And again, guys, if Powell strikes a hawkish tone, if he mentions that rate cuts are not as that the Fed is considering soon enough, if we look at the dot plot, and the dot plot is showing us that we're going to get less cuts than possible, then we are going to be looking at selling the Nasdaq. Okay, and also keep an eye on the tech stocks. You can focus on the Nvidias, the Googles, because those ones will usually show you what's likely to happen. Now, I know this is a favorite for most of you. This is Euro USD. So now Euro USD has been moving like this. Okay, we've been seeing it steadily rising from the 29th of Feb. It peaked around here. That was on the day we had the NFP. The NFP number uh, came out slightly lower than the previous. The previous was 353,000 jobs. That was for Feb data. It came out lower to around 275,000 jobs. However, on that particular day, we had a revision of the data. Okay, so the revision of the data confused traders because we were assuming that the NFP data was actually positive for the dollar, but it actually wasn't. Okay, it was actually bearish for the dollar. However, PPI came in later and it actually came out quite strong. And when we got that strong PPI data, that was last week, I think it was around the 13th of March, we saw Euro USD starting to decline steadily. And ever since that PPI data, Euro USD has been in a steady decline and is now trading along these levels here. Today's FOMC is going to react very strongly. Euro USD is going to react very strongly to today's FOMC. If we get a hawkish pause, then we should see Euro USD selling back to that 50% retracement level on the H1 time frame. This Feb level was drawn from our lows that we had on the 14th of February, and we are most likely going to see Euro USD selling to that level. However, if we see indications that we are going to get uh, that we're going to see more cuts than earlier expected from the previous meeting, then we are going to break out of this channel and potentially aim for that 38.2% fib level that is around uh, 1.089, and also it's also around where we were on the 18th of March. So that's what we can expect for Euro USD. Now, question over to GBP USD. GBP USD today we had data, inflation data, but the inflation data actually was quite bearish for the pound, and I'm expecting that if Powell strikes a hawkish tone today, it is going to knock the pound even more, and we should see it potentially selling all the way back to these levels here, and we should see the pound testing that level of 1.26. Tomorrow we have the Bank of England conference. You're going to be with Rufus on Thursdays as always, and Rufus will guide you on that Bank of England. Okay, if the Bank of England indicates to us that they're going to look at some rate cuts, possibly towards later this year, then we should potentially see a weaker pound, and it should potentially sell back to these levels down here. But for now, we just have to wait and see what Powell mentions. Now, crossing over to gold, I just want to go through gold and just really do an anatomy for what gold is doing. So, from last week, the other week when we had NFP, gold rose and created a liquidity sweep. The price action after the sweep was created indicated to us that there was a bearish order block seated there, and it's seated around the levels of 2194 to around 2186. Now, when gold reached this level, it got into a steady declining trend. Okay, the steady declining trend showed us that actually gold has been declining steadily. However, despite the declines, gold has been creating a lot of liquidity sweeps that have been making it hard for traders to get into stable trades. So I'm expecting that today we should see gold declining possibly towards 2141, possibly even towards the levels of 2138 to these levels down here. And of course, that will be if we get a hawkish tone from Powell. Now, something I need to mention, guys, is we usually have different market reactions when it comes to FOMC. We first have the immediate reaction from the interest rate decision, okay, and the FOMC statement. And then we also have the reaction after the conference, okay, right? And then we have the reaction for Euro session tomorrow. So there are going to be three types of reactions. Either we get a whipsaw on most of these things, especially at the time of the conference, and then also slightly after the conference, and then we shall get the real movement coming in the Euro session. Okay, but for me, this is what I'm expecting. So if gold breaks structure today from possibly a fairly dovish tone, then we should see gold having a rally to the upside and potentially making some kind of a W formation today that should take it up to this level up here, and of course above this level of structure. So that is the two things that are possible. And of course, what I can advise is you can use buy stops and sell stops. I usually tend to use those a lot. Yesterday we used buy stops and sell stops on USD card, and they were actually, we got very nice trades from there. So you can use buy stops and sell stops with average pip difference of say maybe 50 to 60 pips, so that in case you see maybe price action steadily, if you see the price action breaking to the upside and breaking through your buy stop, then you can hold that trade and get it to a better position. So that's really it from me, guys. If you have any questions now, maybe the time for you to drop your questions as we go along. Now, for USD cards, I had buys yesterday for USD card from the CPI data, and actually my buys are still there as I speak right now. I'm expecting that we are going to get a hawkish pause from Powell, and that should provide a lot of strength for uh, for the that should provide a lot of strength for the for the USD card and also for the USD JPY. Okay. Yesterday you are with Samson, and I believe Samson must have guided you on what is happening with the Bank of Japan. Bank of Japan, obviously, guys, they increased their rate for the first time in 17 years. But despite increasing that rate, you know, they then indicated that they're going to keep with the asset purchases. Okay, so it's almost like they hiked rates, but they never really hiked the rates, right? We didn't get the impression that we are going to get from the Bank of Japan. That is why GBP JPY, AUD JPY are on a tear, and they are rising quite substantially because of that indication from Bank of Japan. So I believe anything that is JPY is going to keep moving steadily. If you look at AUD JPY, we are on that steady uptrend. If you look at USD JPY, we're on a steady uptrend there, broke out of that channel and moving steadily higher. So someone is saying, what's moving oil prices? I believe oil prices now, it's really supply and demand dynamics. Yes, we currently have the geopolitical tensions here and there, but they're not really playing a big factor. Uh, when you look at the VIX, which is the fear index, you'll also notice that the VIX is actually trading it's actually trading at very low levels. I do not know whether it's because we're not getting that much of a change on the S&P stocks, but looking at how the VIX is doing, they wouldn't say there's that much fear in the market, guys. There have been some indications that these guys are suppressing the VIX, but I can't say for sure. I don't want you to hold me to my words. So let's look at GPP USD. What is GPP USD up to? Okay. So GBPUSD is in a steady decline. That arrow that you're seeing on my H1 time frame is actually the PPI break that we had. So we had PPI data coming out quite uh, bullish for the dollar, and of course causing GPP to get into that slight decline. Today morning, we also had the data for we had the data for CPI, and of course CPI in the US is in the UK is still sticky. So I suspect that if Powell strikes a hawkish tone today, he's going to put the GPP down to its grave, and we could see it selling all the way back down here, guys. However, if we get a dovish pause from Powell, then we should see it resurging, but I'm not expecting that to happen. I think it's going to be dollar time this time. I don't know what you guys think, but for me, I think it's time for dollar bulls to benefit a little bit for this time round. Awesome. Lamek, you're saying, hello, no, but what is the appropriate risk reward ratio on a 100 USD account? So I tend to believe that, okay, usually when I do live trading with clients, I normally advise them not to risk more than 4%. So if you're trading a $100 account, what I can advise you is if you're risking 4%, that's about $4 on your account. But you'd potentially be looking at risking up to $4. So your risk reward, most likely, I would be putting it at about you risk $4 maybe to gain $4. So you'd be doing 1-to-1. 1-to-1 works very well, okay? Simply because if especially if you're focusing on high probability trades, then you might be in position to get good entry points and potentially see how you can benefit there. Lamik, you're saying, how long have you been trading? What has been your biggest trading? I I began trading in about 2019, and I was actually in crypto, and then I crossed over to forex, and then I actually was able to cross over to stocks. So I'm big on forex, and I'm also big on stocks. And of course, I then switched to focus on CFDs, which are what I'm doing right now, and they're actually quite profitable. Yeah, my biggest lesson, of course, has been psychology, taming myself. Becoming a better trader has also helped me to become a better person, both in character, but also how I manage my emotions on a market. Yeah, so my biggest lesson has been my emotions, managing my emotions, and I think it's very, very important as traders, to manage your emotions. Yeah. What does data revision generally mean? Let's say on CPI or jobs numbers. Yeah, so typically sometimes you have data revisions because when the US labor statistics division or entities putting together data, sometimes they haven't completed their data collection. So they will normally provide us preliminary data, okay, and then they will revise that data when they actually complete their data collection, okay. So that's why sometimes when you check on your calendar, you'll find them putting a P there, indicating that there is some kind of a revision for the data. So it's important as traders to understand, to read for the revisions, because the market always doesn't move on revised data, it will move on previous data. Okay, yeah. Joseph Gicharu, you're saying, can look at the flag on XAUSD. Yeah. Joseph, what flag are you seeing on XAUSD? So was that flag created this week? This is the week starting the 18th of March 2024. Where exactly? Maybe give us some kind of specifics on where you're looking at that. Yeah. But gold is in a steady decline, guys. When a steady decline, I've tried to draw some kind of expected W formation here on gold. And if we have this pattern fully forming, then we should see it moving here. That is on the back of a potential hawkish pause. If rather on a dovish pause. If we don't get a dovish pause, you guys are seeing the steady decline we are in on gold. Right when we got out of that box, we were in a consolidating box from the 8th of March to around the 12th of March, 13th of March, broke out of it and got into a sell, and we are now still in a sell, taking us all the way back down here. Uh, Teach us how to set up and use your moving average strategy. My apologies, guys. I have a sore throat. So moving averages, I have two. I have 50-day, which is the blue, and then the 200-day, which is the red. I usually use the moving averages to generally give me. They are more like a conditional uh, tool that I use just to show me how the market is steadily moving. Whenever I see a crossover or a golden cross for the 50 above the 200, I normally look for buy entries on the higher time frames. And whenever I see it the other way around, I normally look for sell entries on higher time frames. Yeah. Um, Another question, guys. If you have any questions, kindly type them in. I'll be happy to handle them. USD JPY. Yeah, so just like USD cards, and like I said, guys, I have some entries I had there for USD card that are moving steady. I'm going to hold them into FOMC. Just like USD card, I'm expecting buys for USD JPY, and I'm expecting that we should see USD JPY propelling itself to higher levels, towards possibly towards 151, possibly towards 152, and we should see it moving much higher. Now, when you go on the daily, we are still below record levels that we reached about 151. On the fact that Bank of Japan is going to keep with its asset purchases and the same level of their asset purchases, I think that is going to support the stock market in the Japan, like Nikkei. But I also think it's also going to support potential upside for the USD JPY and also weakness for USD JPY. So today we should see a slight retracement from the release of the rate, and then of course we see it continuing, possibly moving higher there. So that's what I'm expecting for the USD JPY. This arrow right here, the one going down here, is what I was expecting in case we got the market reacting to that interest rate hike to the downside. But because of that asset purchases statement, I think traders stayed short on the yen, and we saw it actually steadily increasing. So we should see that continue. Lamek, you're saying, what is your biggest trading weakness? I think my biggest weakness at times is decision making when it comes to trades. At times, I will take long to make a decision and I'm going to take a trade. That's why I try as much as possible to be like 100% certain when I'm entering a trade. I know it's hard to do for most people, but I usually try to focus on trades where my market edge is. If I don't see them, then I will not really give the trades what I'm looking out for. Financial incorrect. Thank you so much. Thank you. Saying hi, Mr. Kiza. Thank you for the information. I really appreciate. It's my honor. Thank you so much for appreciating. Yeah. Any more questions, guys? As we almost wind up this very nice snapshot. Any more questions? I'll be happy to take them if any. Okay. If you don't have any questions, guys, then I think that will be it for today. We expect to sell GBPUSD on FOMC since it's unchanged. Yeah. Of course, technically GBPUSD is in a steady decline, right? Technically, GBPUSD is in a steady decline, without a doubt. Martinez, Zambia, and of course, you know, that weakening CPI data we got this morning at 9 a.m. has reinforced the GPP short position simply because the inflation came in lower, right? So we're already seeing that bearish candle that has created one time frame for 11 a.m. So we should see a completion of that candle, and I'm expecting that the 12 p.m. candle opens below, and we see it continuing with a steady decline. Yeah. What's your view on BTC USD, Francis Martin? BTC USD is having a bit of a small pullback, which is normal for assets. It's been on a tear from the start of the year. We saw it rising from as low as 38,000 to about 69,000. It even extended as high as 73,000 on some platforms. And of course, guys, don't forget you can trade the cryptocurrencies on FX Spacer. There are very many. Most of you guys are not aware, but you can trade all these things. You have all these cryptos that are available for trading. So make sure you don't miss out on this opportunity and look for these assets and see how you can trade them. Yeah. So we should see that pullback happening, and then see it possibly reversing. Thomas Machuma, you're saying, do patterns always work? Yes, patterns are reliable. I use a lot of patterns in my trading. patterns are very, very reliable. Yeah, you can use them for your trading. Yeah, they are reliable. Yeah, not 100%, but I can say without a doubt that they are reliable. Yeah. So I think that's it from me, guys. I wish you all happy trading and a happy FOMC day today. I wish you all an awesome day for all of you individually, and I hope you are able to benefit. GPP JPY also same thing, steady uptrend. It's going to reach 19195. 195 is where it was in 2015. So we have already broken and taken out the peak for GPP JPY, and we are now in record levels. So we should see it continuing to move higher and possibly towards these levels of 194, and of course maybe 195, where it was in 2015. Yeah. So that's it from me. Happy trading, guys. Until next time, we meet soon, guys. Cheers.